welcome to the Veterinary Financial Podcast, where we discuss financial freedom and professional success. I'm Meredith Jones, a veterinarian and financial planner for vets. So a couple months ago, I was asked to speak at the very first virtual relief veterinary conference, and they asked me to speak on personal finance tips for relief vets and techs. So I wanted to share here some of the points that I shared. The first one, I think this is relevant whether you are currently a relief vet or tech, or whether you're thinking about getting started with working relief. And I get a lot of questions about that from clients. And so wanted to start with number one, which is getting started. First, you want to make sure that just your personal finance basics are in place, like your emergency fund. I always talk about two levels of emergency funds. A starter emergency fund is about $3,000 to $5,000 because that's going to take care of the majority of your emergency expenses. Then the next level of emergency fund is 3 to 6 months of expenses. So maybe if you're in a dual income household and both of you have stable jobs, maybe you're choosing a 3-month emergency fund. If you're in a single income household, or if you're in a couple but one of you maybe doesn't have a stable job, then you would probably pick a 6-month emergency fund in that case. And then insurance. So having that in place. So certainly for veterinarians, having a professional liability insurance, PLIT, in place is going to be really important. Health insurance. So that's one of the things when you are thinking about becoming self-employed that you will need to think about how you're going to get health insurance taken care of and covered for you. If you have a partner, then you may be able to use their health insurance plan. If you don't have a partner, then you're probably looking at a marketplace plan, or if you live in a state like Virginia, that's where I live, I happen to know that you can be a business of one and have access to group health plans. That's relatively uncommon, but if you're in a state that allows that, that can be helpful as well. And then disability insurance. Really important for veterinarians, especially disability insurance. If you don't have a long-term own occupation disability policy, that's going to be something that is going to be really important for you as income protection, because if you are, especially if you're going full-time relief, then you're not going to have coverage through your employer anymore. I would argue that it's going to be better to get your own disability policy, even if you did have coverage through your employer, but certainly very, very important for a full-time relief vet. And then also paying off high interest debt. So if you have credit card debt, or if you have non-mortgage debt that is over 5%, then you're probably looking at paying off that high interest debt as soon as possible as well. And that can help set you up for success being self-employed. And then knowing your cash flow. So the way to know, for example, like, how do I know what 3 to 6 months of expenses is for me for an emergency fund? Well, the way to know that is to track your expenses. And so I highly encourage using a budgeting app like Monarch. It used to be called Monarch Money. Now it's just Monarch. That's a really great budgeting app. We use that with our clients all the time. There are a couple of other budgeting apps out there. There's YNAB, which is You Need a Budget. There's also EveryDollar. So a few different apps out there. Monarch is the one that I would go to first and give it a try. And you connect your accounts to it, and you can automatically see where your expenses go, and it'll categorize them for you. It's really a super helpful tool. So you can use that tool to help you establish what is a baseline for your expenses, what is a baseline for your income, what is the lowest amount of income that you generally produce in a typical month. It can help you to be intentional with extra income. And so I see vets all the time who are earning some extra income through doing relief work on top of their regular job, or they're working relief full time, but they're picking up some extra shifts. And so if you know what your baseline is, then you can be more intentional about, okay, I'm going to put money from that extra shift toward this particular financial goal. And so that's something that I like to help vets with as well. And then bookkeeping software. QuickBooks is a really popular bookkeeping software. There are some others out there as well, but staying organized, making sure that you're sending all your invoices after your shifts, making sure that you're actually getting paid for those shifts, and then also just keeping things organized so that when it's tax time, which it's almost tax season right now, when it is tax time, it's not going to be a huge hassle for you to figure out, okay, what were my expenses? Make sure that you're keeping track of all of that income throughout the course of the year. Make sure you have all your 1099s, for example. And you can also just use a regular spreadsheet as well. Some people are just spreadsheet people, and that's the way that they stay organized. That's fine as well. And then I would highly encourage you to have a separate bank account for your relief work. Of course, this is more important the more relief work you're doing, but if you have a business bank account, then you can use that to make sure that you are saving for taxes and also pay yourself from it so you can take that money. Let's say you work a shift, take that check and deposit it into the business bank account, transfer the money that you are going to be able to take home over to your personal bank account and go from there. So it keeps things separated and keeps things organized that way. Tip number 2 is pay your taxes. If you are a full-time relief vet or relief tech, you're going to want to hire a tax pro. Tax professionals have a few different designations, and so you could look for an EA, which is an enrolled agent. You could also look for a CPA. It's definitely very important that you take a look at this, because what a tax pro can help you do is make sure that you're getting all of your deductions. They can also make sure, because typically when you're self-employed, your taxes are a little bit more complicated than they were when you were just W-2. So definitely taking a look at that and outsourcing that, and let the professionals help you. And then setting aside a percentage of your income to pay quarterly taxes if you're 1099. This is a very common problem that I run into, where veterinarians either forget or just don't pay attention to the fact that they are going to have to pay taxes from their 1099 shifts. If you're working just a few shifts over the course of the year, it's probably not something that you have to worry too much about. But if you are working full-time relief, or if you are working a few shifts a month, then it's something where you would have to think about paying taxes quarterly to the IRS. So you can actually go on the IRS website or write the IRS a check every quarter. This is something to look up, because the due dates for quarterly taxes are not exactly every quarter. So the IRS makes it a little bit more complicated than that. And so some of those dates are more like 2 months apart or 4 months apart. So you can take a look at that online as well. And the goal when you're paying your taxes, so I run into a lot of folks who are like, I want to know exactly how much I should be paying in quarterly taxes. And it's like, okay, it's really all an estimate. The goal is to be directionally correct. And if you pay in too much, you'll get a refund at tax time. If you don't pay in enough, then you'll have to pay more. But if you don't pay in any because you're worried about paying exactly the right amount, well, then you could be subject to penalties because you didn't pay quarterly taxes throughout the year. So the goal is to have an estimate for how much you would pay in taxes. And that's something that we can help with on the financial planning side. It's also something that a tax pro can help with as well. And then common deductions to think about if you're 1099, certainly check with your tax professional on this. But in general, common deductions for vets and technicians who are self-employed would be licensing fees for your professional licenses, memberships like your state VMA memberships or AVMA memberships, or any species-specific memberships that you may have, your DEA license, your professional liability insurance, continuing education expenses, travel for continuing education. You could have a home office deduction, something to ask your tax pro about as well, so that you can also claim mileage for your relief shifts. And any of these things, of course, are relevant to self-employed relief vets who have 1099 income. And so if you are kind of working a hybrid role where you have either some W-2 employment and you're just working relief on the side, anything that's going to be reimbursed by your employer, you can't write off on your taxes. Or if you're one of the relief vets who is actually a W-2 employee, then those would be things that would probably be reimbursed for you and taken care of and not be eligible for deductions. Other things that some vets don't think about when they're self-employed and they're writing things off at tax time would be scrubs, or if you have any specific shoes that you wear to work only, like Danskos, for example, then those could be something that would be a deduction as well. Your Plum subscription or your VIN subscription or your Vet Girl subscription, lots of different things that you could consider, and definitely check with a tax professional and just make sure that those are eligible deductions for you. Number 3 is saving for retirement. So I see a lot of self-employed vets who think about a lot of other things that I've already been through, but they forget to save for retirement when they're self-employed. And so saving for retirement is just as important when you're self-employed as it is when you are working for someone else as an associate. But because it takes some additional effort, it can be overlooked. And so if you're self-employed, then you're probably looking at setting up a retirement plan on your own. If you are a relief vet who is an employee, then probably that retirement account is going to be provided for you, and you can just take advantage of that group's 401k, for example. Okay, let's talk more about if you're a self-employed relief vet or if you're thinking about becoming a self-employed relief vet. So I'm a big fan of the solo 401k. The reason for that is because it allows both employee and employer contributions. So on the employee side, you can contribute, this is 2026, you can contribute $24,500 to your solo 401k on the employee side. And then at tax time, your tax pro that you hire can tell you how much you can contribute on the employer side of the account. And so you'd have an opportunity to be able to contribute potentially even more than you would be able to as an associate. So that's something really important to keep in mind. Now, most relief vets they're just working for themselves, right? If they're self-employed, 1099, they're independent, right? And they don't have employees. If you were in some sort of a niche like behavior and you hired a technician, well, then you're probably opening your own practice, right? And you're not just a relief vet at that point, or not only a relief vet at that point. So if you're hiring employees, then you wouldn't be eligible for a solo 401k. But the vast majority of relief vets, of course, are lone wolves, and they would be eligible for that solo 401k. And that's something that a financial planner can directly help with, is opening a solo 401k for you. You can open one on your own. If you open one with a financial planner, they can help you choose the investments in that account and help make sure that when you make a deposit, it goes directly into investments, and keep track of your limits and make sure you're not going over the limits for contributions, things like that. A SEP IRA is something that I get a lot of questions about as well. SEP IRA is another way to contribute to retirement as a self-employed individual. The drawback with that is that it only allows employer contributions. And so you really don't know until tax time how much you're allowed to contribute to a SEP IRA. I have had clients in the past who they were contributing throughout the year to a SEP IRA, and they ended up contributing too much and had to take some money out. And so that's something that can happen with a SEP IRA, but is much less likely to happen with a solo 401k because of that employee contribution where you can contribute up to $24,500 throughout the year. These contributions to retirement pre-tax to a solo 401k, for example, that's going to reduce adjusted gross income. So it's going to reduce your taxes. If you are on an income-driven repayment plan for your student loans, it's also going to reduce future student loan payments, which is a great thing, as we're seeing a lot of veterinarians recertifying their income Now, actually starting this month, we're seeing people recertifying their income for the first time in years. Reducing that payment as much as possible has become really important. And remember, when you're saving for retirement, your savings rate is the biggest thing that's going to get you to your work optional date. So your savings rate is going to be the thing that really sets you up for early retirement, if that's something you're interested in, or just having more options in the future for when you scale back on work. So savings rate is really important. Most of us as veterinarians, we started later, right? We started later with contributing to retirement because we were still in school. When a lot of people were maybe age 22 and they were done with school and they were contributing to retirement, we were in school until we were 26, 27, or even later. And so it's definitely important to make sure that we are saving for retirement, and the higher rates would be something to look at. If you haven't looked at what your savings rate is for retirement in a while, or if you have taken a break because you started working relief, if you've taken a break on retirement savings, this is the time to get back into it. My next tip, this is actually my favorite one. Number 4 is say yes to a sabbatical. A lot of relief vets, they get into working for themselves because they're like, hey, I want to have all this freedom. I want to travel. Then they become overcommitted and they overschedule themselves and they say yes to a lot of shifts. A sabbatical is a time where you take more time off than typical so that you can travel, pursue your interests, reset your life, right? Just kind of reset everything and take a breath and regroup in your life. The way to set yourself up for a sabbatical, number 1 is just knowing your living expenses. The way you know your living expenses is you use a cash flow app, a budgeting app like Monarch Money, and you can see what your actual expenses are. That can help you start to research and plan for that sabbatical. I would recommend, if you want to take a career break, if you want to take a sabbatical, set up a dedicated savings account for it. Set up a high yield savings account where you're like, hey, this is my sabbatical fund. Or you can name it for whatever you specifically want to do. Like, this is my Europe fund. So have a dedicated savings account so that you can automatically put money into it every single month. Then you can work toward that goal of taking that sabbatical. If you take, for example, like a 3-month sabbatical or 6-month sabbatical, I had a talk that I did previously for relief vets on taking a 6-month sabbatical. I think we're about to reboot that this year. If you take a sabbatical, what you can do, if you have a student loan payment and you're on an income-driven plan, you can actually have your student loan payment recalculated to have a lower payment because, okay, now your income has dropped. And so you may even be able to get a $0 payment if you're taking a career break in that case. The other thing to look into is travel hacking. And certainly if you have credit card points or if you have airline miles, you might be able to use those to help fund your sabbatical and defray some of the costs by doing that. A couple of resources that I wanted to share just on taking a sabbatical in general. So we had episode 74, which was called How a Sabbatical Can Reset Your Life with Dr. Anna Foster. She's awesome. She has a Substack out there that's called Dr. Anna Foster Travel Vet. She actually did take a 3-month sabbatical. We can learn from her and figure out, okay, how can we make this happen for ourselves, right? Another resource, there's a book out there that's called Retire Often that is by Jillian Johnsrud, where she talks about taking sabbaticals and having that be sort of mini retirements and having that be something that you plan your life and your work around so that you can take those larger breaks. And then number 5, of course, there's going to be a student loan tip here, right? So number 5 is optimize your student loan plan. And so highly encourage you as a relief vet to pick a strategy for your student loans. If you have student loans, you are going to want to pick a strategy of either using an income-driven repayment plan and going for forgiveness, or paying your loans to zero. And so anything in between, you're probably wasting your money. Meaning if you're going for forgiveness and you're paying extra, that's probably not going to be a good use of money for you. And you really should be putting your money toward other goals, like maybe saving for that sabbatical. The other thing with optimizing your plan is knowing what's next. So a lot of people are either on save and it's going to get phased out really soon, or they're on the pay plan and it's going to get phased out in the next couple of years. So it's really important to know what's next with your student loan plan so that you can make sure you are planning accordingly. Make sure if you need to invest for the tax bomb, make sure that you are setting aside money in investments, not just savings, so that you can set yourself up for success with having that tax bomb, that tax implication that would be due at the end of student loan forgiveness. Make sure that you're set up for that. And then, by the way, I mentioned reducing adjusted gross income with 401k contributions. I mentioned that can help reduce your student loan payment. Also, health savings contributions, health savings account contributions can reduce adjusted gross income as well and reduce your student loan payments. And if you're married, filing your taxes, filing separately may be able to save you a lot of money on your student loan payment. And so that's something, if you haven't been evaluated for married filing separately, that's something to certainly check out and see if it could save you a lot of money. I've met with a lot of vets lately where it would save them over $1,000 a month on their student loan plan. So it is a big deal. It's not just a little bit. Okay, so to recap the tips, you're going to want to get organized, pay your taxes, save for retirement, say yes to a sabbatical, and make sure you're optimizing your student loan plan. Those things are a lot of the things that we help with at All Vet Financial. So if you need help with getting organized with retirement planning or with optimizing your student loan plan, that's exactly what we do. You can visit allvetfinancial.com and click the Book Now button to schedule a free intro call. We'd love to chat with you. Until next time, take care and continue your path to financial success. This podcast is for informational and educational purposes only and should not be considered individualized financial advice. If a specific investment is mentioned, it should not be considered a recommendation or endorsement to buy or sell the investment. All investments involve risk. Past performance does not guarantee future results. You are encouraged to seek the advice of a financial professional before implementing any investment strategies discussed. Yay, compliance!